Gold has fascinated humanity for centuries, symbolizing wealth and security across cultures. Today, it remains a cornerstone of the global financial system and a popular investment, especially in uncertain times. Unlike stocks or paper money, gold is tangible, something you can hold, offering a unique sense of security. When instability rises, so does demand for gold, earning it the title of safe haven asset. This week, gold prices surged in response to global events, diplomacy, currency shifts, and regional tensions. We'll break down the catalysts behind gold's rise and how related commodities moved in tandem. Let's dive into the week's events and uncover what's really driving gold's enduring allure. This week, a major diplomatic move between the US and Iran sent ripples through financial markets. President Trump announced a 10-day pause on attacks against Iran's energy infrastructure, hinting at new diplomatic channels. His optimistic tone suggested progress toward easing a conflict that had fueled global anxiety. The Middle East, vital to the world's energy supply, had been on edge, and this pause was seen as a hopeful step. Typically, reduced tensions would lower gold demand, but the market's reaction was more complex. The announcement led to a slight weakening of the US dollar, which made gold cheaper for international buyers. As the dollar softened, demand for gold increased, supporting higher prices despite easing geopolitical fears. This interplay between diplomacy and currency shows how multiple forces can drive gold in unexpected ways. The result? A surprising rally in gold, even as the threat of conflict receded. It's a vivid example of how global events and market psychology intertwine. Investors must look beyond headlines to understand what truly moves the market. In this case, peace talks and currency shifts combine to create a perfect storm for gold. The lesson: in finance, outcomes are rarely straightforward. The US dollar's relationship with gold is fundamental. When the dollar falls, gold usually rises. Gold is priced in dollars, so a weaker dollar makes it more affordable for buyers using other currencies. This week, after Trump's Iran announcement, the US dollar index dipped, breaking a 3-day streak of gains. Even a small decline in the dollar can have a big impact, as it did here. International investors saw gold become cheaper, sparking renewed buying interest. At the same time, a weaker dollar signals to US investors that their cash may lose value, making gold more attractive as a hedge. The result: gold rallied on two fronts, global buyers and domestic investors seeking protection. This dynamic shows how currency moves can quickly shift market sentiment. It's not just about geopolitics. The dollar's strength or weakness is a powerful force in the gold market. Investors worldwide watch these signals closely, adjusting their strategies in real time. This week's events were a textbook case of how currency and commodities are intertwined. Understanding this relationship is key for anyone navigating today's volatile markets. Gold's surge was as much about the dollar as it was about diplomacy. Let's look at the numbers behind gold's dramatic week. On Friday, March 26th, gold surged over 2% during Asian trading, catching global attention. The spot price jumped to $4,167.32 per ounce, while U.S. gold futures climbed to $4,157.60. This broad-based rally showed strong investor confidence, not just a fleeting spike. Yet despite Friday's surge, gold was still set to end the week with a slight loss, about 0.5%. Earlier in the week, gold had dropped nearly 3% in a single session, pressured by a stronger dollar. The week's volatility highlights how quickly sentiment can shift on major news. One announcement reversed days of losses, demonstrating the market's sensitivity to global events. The coordinated rise in spot and futures markets signaled a genuine shift in investor mood. It's a reminder: in commodities, fortunes can change in an instant. Traders must stay alert, as a single headline can redefine the entire week. Gold's performance this week was a masterclass in market volatility. The lesson: expect the unexpected. The US-Iran developments are part of a much larger, volatile Middle East landscape. Ongoing conflict in the region has fueled global uncertainty, keeping gold prices elevated. Traditionally, rising geopolitical risk boosts both the dollar and gold, but this time, the dynamics shifted. The conflict's impact on energy supplies introduced new variables, especially inflation fears. Oil price spikes from supply disruptions sent shockwaves through the global economy. Investors now weigh gold's safe haven appeal against inflation risks, leading to wild price swings. The temporary pause in hostilities was positive, but deep-rooted tensions remain unresolved. Markets react quickly to any sign of escalation or peace. Ababshinsan de drund, sundaumaners in de bonnar. Idzechen Brahmer Dachen Graj. Gold's role as a barometer of global risk is more important than ever. In this environment, gold remains a crucial part of diversified portfolios. The Middle East's instability ensures gold's enduring relevance. The Middle East conflict drove oil prices higher, stoking fears of global inflation. Rising energy costs ripple through the economy, raising prices for goods and services everywhere. Central banks like the U.S. Federal Reserve may keep interest rates high to fight inflation. High rates make gold less attractive compared to interest-bearing assets, putting pressure on its price. Yet, gold's reputation as an inflation hedge draws investors when paper money loses value. This creates a tug-of-war, high rates versus high inflation, both pulling gold in different directions. The result is ongoing volatility in the gold market. Investors must constantly weigh these competing forces. Gold's appeal endures even as economic worries shift. Gold wasn't alone in its rally. Silver and platinum surged as well. Silver jumped 2.6% to $68.75 per ounce, reflecting both safe haven demand and optimism about industrial growth. A weaker dollar made all precious metals more attractive to global buyers. Platinum soared 3.5% to $1,901.60, boosted by its industrial uses, especially in the auto industry. The coordinated rally suggests broad market optimism, not just fear-driven buying. Investors saw opportunity in both precious and industrial metals. Positive economic signals and currency shifts fueled the surge. The metal's performance highlights how interconnected these markets are. When conditions align, the entire precious metals complex can move powerfully. This week, gold, silver, and platinum all benefited from the same global forces. The upbeat mood extended to copper, a key industrial metal and economic barometer. Copper futures rose 1% in London and 1.1% in the US, signaling optimism about global growth. Reduced geopolitical risk boosted business confidence, driving demand for raw materials. The rally in copper, alongside precious metals, painted a picture of cautious optimism. Investors balanced hopes for growth with ongoing inflation concerns. Meanwhile, oil prices fell as Middle East tensions eased, showing how different commodities react to the same news. This divergence underscores the complexity of global markets. A single event can send metals soaring while oil retreats. Understanding these nuances is key for investors. The week's moves reveal the intricate dance of supply, demand, and sentiment. This week's events show how deeply interconnected global markets have become. A diplomatic move in Washington instantly affected gold prices worldwide. Gold's surge was driven by a mix of easing tensions, a weaker dollar, and shifting investor psychology. The same news sent oil lower and copper higher, proving that each commodity responds differently. Investors must look beyond headlines to grasp the full picture. Understanding the unique fundamentals of each asset is crucial for success. Gold's rise is a reminder that markets reflect our hopes, fears, and expectations. Staying informed about world events is more than academic. It's essential for protecting our wealth. The week's volatility underscores the need for vigilance and adaptability. In today's world, every headline can shape the value of what we own.